Hello traders, good day to you all. Today it is the 19th of June 2014. This is Christopher Glen and this is a daily market review for the current market status. We had a pretty nice day yesterday. The FOMC meeting brought us a lot of liquidity and a lot of potential. Mainly we saw that the dollar itself lost a lot of strength in the market. We will go over that in a second. On some areas it gained strength. I want to show you something amazing regarding the pound versus the US dollar. Um, Today I've recorded this session a bit late because I wanted to see what will be the outcome of the unemployment claims in the United States out of this report. The thing is that yesterday we had a lot of movement on behalf of the dollar, and an additional confirmation over here would have devastate the charts in terms of the dollar. Fortunately or unfortunately, it depends on who you're asking. It seems like the dollar received approximately the same prediction from the unemployment claims. Therefore, there wasn't a serious expression on behalf of this announcement. We do see some liquidity in the market, but nothing serious enough to mention. Um, we do have the manufacturing index. We had that already. Just one second. Let me refresh the page. Yeah, just right now. So just right now we had this indication over here which expressed good potential for the dollar. And let's go to the chart. Let's analyze several assets. Let's see what's the potential. If I'm not mistaken, I sent the signal for the dollar versus the Turkish currency to drop down. Let's see what happened over there. So first of all, let's go to the dollar index. It's a bit slow today. There we go. Okay, dollar index. So I've said that several times that I've been analyzing this uptrend movement. I said that I'm expecting to see an impulse movement. We've received an impulse movement. I've said that I'm expecting to see a corrective pattern dropping down, forming a corrective pattern. We've got the A, we've got the B, and we've got the C forming at the moment. A bit more downtrend toward this area, the 80 area. Let's add a line over here just so that we'll be able to talk about that in the future. So a pullback toward the 80 line is very logical in this condition because of two things. First of all, the beginning of a corrective pattern, this downtrend movement that we've received yesterday and today on behalf of the dollar losing strength, has a limitation in terms of time frame. I mean, the market can't just fall down. It needs to receive an additional confirmation for this downtrend movement. Now, I see an initial downtrend movement toward the 80 level. Over here, we will need to make a reassessment regarding structure and regarding the potential. We do have, I repeat, we do have a condition where we will complete the A, the B, and the C wave approximately at the 80 level and then begin to climb for the third wave, which is expected to deliver a large amount of liquidity, but we will need to analyze the structure as we will get it. Why am I saying that? Because if I receive a clean cross beyond the 80 line, then I will expect to see a bit of pullback toward the 80 line and then dropping down. So the 80 line, the 80 support and resistance line is the conjunction level, and I'll definitely pay attention to this structure during this or even next week. So according to the dollar index, we expect to see a bit more weakness on behalf of the dollar, but not a significant one. I do expect the market to bounce backward and forward around the 80 level before continuing higher or dropping an additional weakness, dropping lower over here. The dollar, I've been talking about the dollar in front of the Turkish, the Russian ruble, and South African rand because there's the potential that I see. Very nicely, we saw an impulse movement climbing higher. I said that I'm expecting to see a completion of a corrective pattern over here, and indeed we've received a pullback from this point and beyond. If I'm not mistaken, I've placed a trend line yesterday. Let's see that on a lower time frame. Yeah, there we go. I've been talking about this triangle that we've received over here. I said over here, when we were over here, I said that we will form a backward and forward bouncing around the trend line, which is approximately, it's a logical structure of a triangle. Bounce and across beyond that area. I've mentioned the 2.159 and the 2.142 areas as entry point and stop loss indication, and I said that once the market will fall below this area, then we will receive an impulse movement, the beginning of a downtrend movement. Now we've already received the 1, the 2, the 3, the 4, and right now we're forming the 5th, dropping down. I do expect the 5th to drop down till 2.1, 2.12. And over here I'm expecting it to bounce a bit upward and downward, another corrective pattern, and then breaking down or climbing higher. In this case, because we've got a first impulse downtrend movement, then the expectation is to see a falling market and not a climbing market. We can see that the dollar expressed weakness on behalf of the several assets, but pay attention to the difference between the South African rand and the Turkish. The Turkish is accepting weakness on behalf of the dollar in a smoother way than the South African rand. If we will analyze structure, you can see very nicely that this downtrend movement is a part of the corrective pattern, while this downtrend movement is a new impulse movement dropping down. So there's a huge difference between the structures. Therefore, I do expect to see a cleaner, smoother downtrend movement on behalf of the Turkish currency. So anyway, that is my perspective regarding the dollar. Let's look at the commodities, and I'll try to pay attention again to the Japanese yen. We've talked about the Japanese yen yesterday, and will show you several good potential trades over there. I told you that I'm expecting to see a bit uptrend on the gold and on the silver, but eventually I'm expecting the gold and the silver to drop down once I'm expecting the dollar index to climb higher. So we will need to wait a bit more about this approach. To fulfill this approach. Gold perspective. Let's look at the gold on the larger time scale. Daily chart will be suitable. So we can see that on a daily chart, again, I'm really going far into the highest peak of the gold back in 2010. We've reached the $1,900 for an ounce. Since then, we dropped down in a nice and clean ABC pattern. Now that is my assumption at the moment. The ABC pattern, we've received an A wave, a B wave, and a 5 wave of C wave. A 1, a 2, a 1, a 2, a 3, a 4, and a 5 of the third and fourth and fifth is expected to continue down. At the moment, we've got a great indication to continue down. The stochastic reached an exhaustion level, RSI below 50. Good indication for a put option, for a downtrend movement. Lowering the scale to 1 hour chart. We can say that the last several hours we've received an impulse movement climbing higher. I do expect to see a completion of this structure and a beginning of a downtrend movement on both gold and silver, but we will need to receive that confirmation from the dollar index. Only once the dollar will gain enough strength, and that will be expressed in front of the gold with the confidence that we need. Pay attention to this trend line over here. We will receive usually a pullback toward the trend line, maybe even crossing that a bit and then continuing lower. So that's a great indication. The only thing that I need to wait for over here is a cross beyond this trend line. A cross beyond this trend line begins a new directional movement, a change in direction in patterns, and that will be a great wave to ride on. I'd like to wish you all the best with your trades. Have a pleasant day, and bye bye.